Important things to look for before placing a trade is what we are going to talk about in this video. It's a very important video and please make sure you watch it till the end and don't skip and watch it in parts. Please watch it whenever you have time. Why is it such an important video? It is because in most of your comments I see and I analyze, it is a psychology that runs against you. Sometimes you take wrong decisions, sometimes you take decisions when they are not necessary. Most times I see that a lot of traders are good in their tactics and in their techniques, but somehow it happens that they tend to jump the gun when it comes to decision making. So I decided to make this important video. So what are the important decisions that need to be taken and what are the important facts that need to be studied and the important cornerstones of any good trade is what we are going to see in this video. So if you have not subscribed to this channel yet, please subscribe to this channel before watching this video because I keep bringing out newer and newer content every week, and it's an assurance to all of you that all this content is free of charge and you don't need to pay anything for all this content. And I've seen loads of people making all such videos in which they promise webinars and they are conducting these webinars for humongous amounts of money, and you want to genuinely learn a good strategy, and for that you're paying loads and loads of money, which is absolutely unnecessary. A strategy can be very simple. It's up here that matters. So understand the fact that it's your head that matters, not the strategy. If you have a good calm head on your shoulders, if you have good psychology inside that head, then you're going to make it as a good trader. So without further ado, let's start with the video. So what is this video all about? We're going to talk about the important aspects of placing a trade. Am I going to talk about how to push the buy sell buttons? No, definitely not. That is something that is very rudimentary. I'm going to talk about 4 important aspects of trading here. So these important aspects need to be studied before you place any trade. And this is absolutely hands-on. This is something that you will do every time you place a trade. And so you will protect yourself and guard yourself against wrong entries. So the point 1 is always keep in mind that just like in real estate, even in trading on the charts, location is the most important. In real estate, when you talk about location, you tend to think about the physical, the geographical location of a particular place. So if in real estate, we say that there is a particular bungalow on sale, and if you go and look at the bungalow and the bungalow is really beautiful and you want to buy it, and you think that that area really suits you well, but around that area you see that there are a lot of slum areas and an area which is not really upmarket. And so that bungalow is not really suited there. It stands out in an area in which it should not. You know, if you want that bungalow, you want that bungalow in an upmarket area, right? Where it should stand out, yes, but it should stand out amongst other bungalows is what your definition would be probably. So just like there, you would not really go in for that deal at that particular location. Even on charts, it is important to understand that location is the most important. Now let me give you the same example in another way here. So if you see that there is a bungalow in which you want to go and stay in and you want to buy that bungalow for yourself, would you go and buy that bungalow at higher prices or would you wait for market prices to drop? If the land rates and the real estate prices are really high, would you buy at the peak or would you wait for prices to drop in maybe another year or a couple of years? You would not buy at higher prices, right? You would not buy at the peak. You would buy where you know that you think that the value of the bungalow is really suited for that bungalow. It is a reasonable asking price for the seller. Only then as a buyer you will go and step into that bungalow, right? And you would get into that deal. Just like that in trading, if you see that there is a price at a particular location, would you go and push the trade right at that point? Or would you wait for the price to come at your location? Would you give it some time? Would you give it some space to play around and then see if the price comes to your area? Now that area or that location is what we call in trading as value area. What is value area? It could be anything. It could be a correction towards the moving average. It could be a correction towards the or a retracement towards the CPR. It could be a demand supply zone. It could be a strong support or resistance. It could be anything. But you have to understand that whenever you push a trade, you're trading at an area of value. An area which you think perceptibly is the right area to trade at. So let's see on the charts what I'm talking about. Now let's see what the value area is. I have the chart of the 13th of May open in front of me, right? That was the very yesterday's Bank Nifty chart. What can we find on this chart here that will tell you that it is a value area? This is the first red candle that you see in Bank Nifty. So what does this suggest? This suggests that there are sellers in this candle. So which is the important area here? The high of this candle is important. Now you can see here that price has gone down. It has taken support because you can see this wicks here. So you can see that it has taken support at that area and it has gone up from there. So here what do you know? You know that the sellers are sitting on the top here and there are certain buyers on the bottom here, right? The low of that candle. So is this any space to be trading in? This is no space to be trading in, right? Because you have the wide CPR below the opening candle. And then you can see that the price is bouncing right from the wide CPR. But now here, is this the candle to go long on, the second green candle? What will you do here? Will you go long and then will you collect your profit right up at here at the day's high of the first candle? That is not the way to trade, right? You would trade here. You would take your entry here. Your stop loss would be below this and your target will be here. So that is not the correct way to trade. So that is not the value area. So then which is the next value area? Now you see that the price has dropped again. This is a big red candle. Is this the value area? Will you be shorting here? You will not short here. Why? Because you have the CPR support below it, right? So what will you do here? You will wait for price to show you certain price action here. Now again you see that the price has gone down from here and immediately price has bounced and then price has gone sideways and it has gone up here. Now will you go long on this candle just because you see that the CPR is broken, but the CPR was broken at this candle itself, right? So can this be the value area? This cannot be the value area. So what is exactly the value area? Now when price comes above and goes high and then goes to the high of the opening candle, you know that that area is untouched yet because a lot of strong sellers are sitting in that particular zone. So now you know that if you were to side your trade with these sellers sitting here who are applying pressure to price, you will definitely be able to pick up a high probability trade and you will think that the trade will or the trade might work out a little more confidently, right? So you will have a little more confidence and a little more conviction to stay in the trade, right? So you will be waiting for the price to go back to the high of this particular candle. Why is that important? One, because it is a supply zone. Why is it a supply zone? A mini supply zone, yes, but it is a supply zone, right? Why is it that? Because the price has crashed from here to here intraday. And second thing is it is also a major swing high because the price has swung from this point to this point and then reversed, right? Check it out. The previous day, this was the low here. This is the previous day low. So then the price has swung from there to here and then it has fallen down. So this becomes the swing high. So it's the swing high as well as a supply zone. So whenever price goes back to that area, there is a high chance that the price will reverse from there, right? So that is what I meant when I said that you should be looking out for correct locations. Now let's take a look at another example, the 10th of May, 2022. Let's see the relation between the 10th of May and the 11th of May. What is this area here? This is an important area. This low here is an important area because price has bounced from here, right? You can see the price has bounced from here to here. So this is an important area. Now, what will you do here at that important area? You will mark off this low, right? So let's go ahead and mark that low here. Let's take a ray and mark that low here. Whenever price goes back to that area, you know that there is a demand zone there. Okay, now on the 11th of May, when price came back to that area, now you're ready with your order and you are waiting at this position to see what sort of price action you see here. Can you see bullishness there? You can see that there has been a prior downtrend right from the day open. You can see that these candles have long wicks on the bottom. And then you see that this is followed up with a strong green candle. So now is this the area where you can go long? Yes, this is the area where you can go long because this is the demand zone from the previous day. Now when price comes there, buyers will be active in this area. And do you move the markets? You don't move the markets, right? It is the institutions that move the market. So if you can side yourself by the institutions, then you will most often be a successful trader. So that is why if you see such sort of price action in this area, now it is this area to go long on and then you can take your profit somewhere above. So now let's go ahead and check one example in Nifty. See, this was the 10th of May. We just saw the 10th of May in Bank Nifty. Now let's check the 10th of May in Nifty. You could see that Nifty opened with this big bullish candle and price was pushed so high. So obviously, what do you know? This is the zone where there are a lot of buyers sitting. And if you are following my price action strategy videos or my price action analysis videos, then you will know that we have always been marking these zones. We've been doing this for the past many months now. And now what do you see here? There is no follow up after this candle. So price has not really gone up from there. So will you jump into the trade here? Don't do that. Where if you jump into the trade, you will keep your SLs right at these areas. And that is exactly the reason why price has fallen here. These are all retailer stop losses. Okay. So these are all retail SLs, which the institutions have successfully taken out. You can see these huge red candles. Why are these red? Big red candles, because these are indicative of a lot of sell orders being triggered in that area. So a lot of sell orders being triggered pushes the price sharply downwards, and that is exactly what has happened. But now you can see that in spite of such sharp selling immediately after the first candle, you can see such bullishness on the bottom. Now here is your real area of value. What is the area of value? You know that the price has been pushed up by buyers and in the very first candle itself, isn't it? You can see that from this candle. It's a huge buyer's candle, but you're not going to buy here. Where will you buy? You will wait for the price to come back to a discounted area. Okay. So what is the price at the close of this candle? The close here is 16,345. And where did the price open here? The price opened at 16,257. So you can see the difference there. It's nearly 100 points above, right? Nearly 100 points above. So will you buy 100 rupees costlier, or will you want to buy 100 rupees cheaper? Obviously the 100 rupees cheaper is the correct way to go, right? It also sounds correct, right? If you're getting 100 rupees discount, why not go and buy there? So if you were to buy here, well, will you keep your SL here? And this big an SL, and where will you take your profit then? Even at the R1, the ratio is not 1:2. So this is not how you should trade. So what will you do? You will wait for the price to come back to discounted area, and here is the signal to go long. So that is what I meant by location and the value area being right when you trade. So this is your value area where the buyers are sitting. The second thing that you will be looking out for is price action at that particular important location. So just as we saw in the example, just imagine that you want to take trade at the CPR. So if you see that there is price coming towards the CPR and you think it's a wide enough CPR, and you think that there is going to be a reversal of price from that location, then you want to take trade at that lower level. You want to take trade at that important location. Why? Because the price is going to bounce from that location, right? So if you buy there, you're buying at a discount. You should not buy at a premium. You should buy at a discount. So whenever you go out to buy something, you ask the shopkeeper for discount, right? If you go out to a cloth shop, if you go out to any other shop, you want a discount, right? If you want to buy a shirt, if you want to buy a pant, or even if you want to buy some commodities like cars. So there, when we go to the shop or the showroom, we do ask for discounts, right? We do a lot of bargaining with that shopkeeper. Then why don't you do the bargaining when you're trading? Why do you want to go on and buy at the top? So you should always buy at a discount. You should ask the market for a discount. Tell the market that I want a discount and I will not buy till you give me a discount. Simple. And so it will not allow you to rush into a trade. So always remember, you should watch for price action at an important location. So on the chart, if you see certain reversal candlestick patterns, now if you want to study these reversal candlestick patterns, I have made a masterclass video on it. Just go up here and click on this banner up here. You will get to see that masterclass video and just follow that video. It's all you need to know about reversal candlestick patterns. So if you follow these candlestick patterns at the correct location, you will know that the price, if it reverses, will give you a very good profit. And so price action is a must to be studied at that particular location. We've already seen the correct location or the value area. Now let's see what it means to observe price action there. So let's take the same example of 10th May. Now 10th May, we just discussed it, that you've seen a very big green candle. Price has not had a follow up from this candle, but it has actually fallen. Now it is your chance to get ready on the trigger, and this is your trigger. So here you will observe price action, and here you will see whether you see any sort of bullish pin bar, or you see any sort of combination of 2 or 3 candles which shows you that there will be a bullish pin bar. A combination means an addition of 2 candlesticks where you can see that the formation will be equivalent to a pin bar. And now when you see this sort of a pin bar here, you will go long in that particular location. Okay, so that is an important point to understand here, that whenever you take a long trade, you should see price action. You should see a sort of reversal candlestick pattern there, and that reversal candlestick pattern has to be at your area of value. So you've already decided in the first point that your area of value is this, and whenever you see that at the low or at the open of that candle within that zone here, this being the buyer zone, if you see that the candle is touching and forming a bullish pin bar, it means the buying strength is coming back and this sort of a reversal has ended, and so you take a long trade here. Okay, now that you have decided that the location is right, and you also know that the price action is accurate at that point, and the price action has given you a signal to go long at a particular location. Now will you just jump into the trade randomly? No, you will not jump into the trade randomly. What you will do now is you will wait for price to actually show you a level where you can keep your SL safely. So now you will think, do I have a place to keep my SL? Do I have a right place for my SL placement? Do I have a correct place where my SL is well protected and price will not easily come down there and take my SL? You have to give the market some room. You have to factor in a few points. Say for example, I always factor in 10 points in Nifty and about 30 to 40 points in Bank Nifty for my SL. So wherever my entry point is, I calculate it to the low of a candle if I want to go high, and from that low I give it a buffer of about 30 points in Bank Nifty and about 10 points in Nifty. So that is the way you can go long, and similarly you can go short in these two indices. Of course, you'll have to make out what kind of reversal patterns are happening in stocks that you're trading in and the margins that you need in trading that particular stock. But it's important to factor in that margin, and it's important to keep the SL at a place where it will give you good protection and it will give market some place to move also. You have to give the market some space to move. Because of volatility, a single wick might come down and take your SL. You don't want that, right? So that is why it is important to understand, and it is important to study the location. And once you've studied the location, once you've studied the price action and you've gotten a signal, third thing before placing the trade is not to rush in. Yet your job is not done, so don't rush in. First check where your SL placement is and if your stop loss is placed and well protected. And within the same point, I have not separated these 2 points. I have placed the next point saying that you should know where your target placement is in relation to the SL. Now we have clubbed these 2 points together, but you could also separate these 2 points. So in the third point itself, I would like to mention here that the target is also important. Okay, so once you know where your entry is, once you know where your SL is, now you want to check whether your target is at a level where it gives you a risk reward of at least 1:2. Don't step into a trade if you don't have a 1:2 risk reward. What do I mean by that? Let's check on the charts. Fine. Now let's go back to the 10th May example and we will talk about this day itself. Now I said that you should be ready with your order at that point when all 4 of your points are satisfied. Now 2 points have been satisfied already, right? So you've decided that this is the area of value. You've decided that this is the price action that shows you a reversal sign there. Now what is the third point? I said that you should see where your target booking is in relation to your SL. So now where will your obvious and your natural SL be here? Your natural SL will be a little bit below this particular line. Why? Because it is the low of this particular candle here. So you will place your SL somewhere here. If you place your SL here and your entry is here, then if this is your stop loss, we have not measured it, I'm not measuring it on some points, but I'm just letting you know that if that is your stop loss, then your profit booking should be at this particular high. Now can you see and tell me whether this target is bigger than your SL? It obviously is, right? So your obvious target should be at an area where you know that price will easily reach without any hindrance. So do we find any hindrance here? Yes, you will say now that there is a CPR here, But can you see that the CPR has already been broken by the first candle and these red candles when it came down? So is the CPR really going to act as a strong resistance? No, it is not going to act as a strong resistance, especially when you see a strong bullish candle in the very first, at the very opening of the day. That opening candle has already set the tone for the day. It is already telling you that the price will, after coming back to the value area, bounce once more, because it has already set a demand zone here, and that demand zone is the area of value. So whenever price comes back to that demand zone, you are going to take a long entry there, and you're going to ensure that the SL is at a correct location here, a safe location here. So even if after this pin bar price does tend to give some volatility and bounce again after that, then your SL is protected. If you keep your SL immediately below this candle, then in volatility it might be taken, even if the price might shoot up. But then you can see now that this particular target is at around 1:2. We have not calculated it in terms of points. You can go ahead and do that on your chart, but I'm giving you an example here. Okay, let's see another example now. Okay, now let's go to the latest Bank Nifty chart, that is the 13th of May chart, which happened just yesterday. Now I just said that this is your value area. Why is that the value area? Because you've seen a crash coming with from the red candle here. So this happens to be the value area. The price has crashed from here. So high chances that if you see a reversal candlestick pattern like this, then you know that the price will go and crash from there. And this is a reversal candlestick pattern, right? So the red candle has taken out the low of this green candle here, and so the price is showing you a reversal sign right at the high of the day. So you can see these two candlesticks here. This is a reversal candlestick pattern where that particular green candle's low has been taken out. Okay, so now what do we see here? We know that this is a particular value area. You know that the price action is also giving you an indication. Now you have a good place to keep your SL. What is the good place? It is above this particular candle here. So your SL is there because you have a protection here, right? This is a supply zone, so you have a protection there. And then you can enter somewhere in this area. You can short any of these candlesticks. And then where would be your profit booking? Your profit booking should ideally be at this level where the price had previously had a bounce. So this is the previous swing low, and that is your profit booking. So let's see, what is your SL? This is your SL and this is your target. So whenever your target is bigger than your SL, that is what you want. That is the trade that you want to take. So this is how you should be looking to place a trade whenever you see that the value area has been satisfied and the price action is also showing you the correct formation, and also you see that there is no hindrance for price to travel to that particular location. Will you say that there is a hindrance of the CPR in this location? No, because the CPR has already been broken and the price has actually been going within the CPR for the entire day. The CPR has been broken in this area. So that CPR really holds no importance now. And so the price will really have no hindrance going to that particular zone or that particular target booking area or profit booking area of yours. And the fourth point here that I want to mention is that position sizing is extremely important. Now you've seen the location in the first point, you've seen the price action at that correct location or the value area, and now the third point, you've also seen that your SL placement is correct. But now will you again jump into the trade? No, you will not jump into the trade yet because your position sizing is not yet done. What is position sizing? I've already made a video on it. Please go ahead and watch this video and then you will be able to learn what position sizing is. It was my 1K special video, so please go ahead and watch that. It's the most important video on my channel. If you were to ask me which is the most important video that I've made yet, it is the video on position sizing. So what is position sizing? It is the quantity that you're going to trade. Trust me, this point is really understated. I don't really see many videos on YouTube based on this, and I want to tell you here that position sizing is the most important thing, and put the most amount of emphasis on position sizing when taking any trade, because wrong position sizing keeps traders away from being profitable. Wrong position sizing makes traders lose such huge and colossal amounts of money in one single trade that they can never stick around in the market to really capture the experience that they need, the all-round experience, the holistic experience they need to become good and profitable traders. If you want to become good and profitable at trading, then you have to spend at least 2 years in trading, trying to balance out your profits and losses. Whenever in the initial stage you suffer only from losses, you are jumping from strategy to strategy. Then once you find something, then you want to follow it, and then you feel that that strategy is going to give you good results. For a few days it gives you good results, but then it starts backfiring, then you change that strategy. That is the struggling phase of a trader. Then you get to learn that okay, you need to follow one single strategy. Maybe you see my videos, or maybe you see other YouTubers. There are very good YouTubers around who keep telling you that you should follow only one strategy, and if you take their advice, then you will become profitable traders. So like they say, or like I say, if you listen to us, then you will start following one single strategy. Now you understand that okay, this strategy has some of its lacunas, it has some of its advantages. Then you start to side yourself with the advantages, and when that happens, you start to balance out your losses and profits. But amongst all this, it's important to understand that you trade in the correct quantity, and to learn all this, trading in the correct quantity is ultra essential. If you blow up your capital within the first month, you're out of the market. How are you supposed to learn? Trust me, paper trading does not help. Have you seen me make any video yet on paper trading on this channel? I've never made a video on paper trading. Why I've never made a video specifically on paper trading? Because I feel paper trading is like sitting on the sidelines and telling Sachin Tendulkar how to bat. That is really not the game, right? That is not really not how it is done. So I don't like to commentate, and I don't like to sit on the sidelines and be a critic. What I like to be is a good trader sitting on the sidelines till I know that my turn has come and I need to go out there and bat. So when I go out there and bat, I will defend most of the times, and then I'll hit the sixes at the loose balls. So that is the most important point here. So what do? You position size properly for all this experience to come in, and then you give it time, and then you become a profitable trader. But for that, position sizing is ultra essential. That is why I'm spending so much time discussing about position sizing. And position sizing gives you the idea of how much you should bet on each trade. So one quantity or two quantity or 10 quantities. What is the quantity you're going to trade in? If you're trading in stocks, do you want to trade in 200 quantity, or do you want to trade in 500 quantity? If you're trading in, say, Nifty, do you want to trade in 5 lots? Do you want to trade in 10 lots? Do you want to trade in 20 lots? And that is something that position sizing will tell you. So if, for instance, you have a 20-point stop loss in Nifty and you want to bet only 1 lakh rupees of capital on it, then you will be able to find out how to position size properly and how many lots to trade in based on the calculation of position sizing. Now the video that I talked about on position sizing, it will help you to do all these calculations right there in the live market. It will help you stay in the game of trading for long enough to make you good and profitable traders. So that is how you will gain experience, and that is why that is my most important point, though it is the last point, called position sizing. So I hope you've liked this video and you've understood every point that I have mentioned in this video. Each and every one of you traders should follow these 4 points. These 4 are the cornerstones on which a good trading career will be built on. Trust me, my trading career is also built on these particular 4 stones only. And these are the 4 cornerstones that any successful trader's career is built on. It is no different for any retail trader. It is no different for any institutional trader. After all, trading is a matter of business. You are running a business with a specific risk, and you have your own risk appetite. So based on your own risk appetite, you will be trading. But whatever your risk appetite, let's say you have 1 lakh rupees of capital, let's say somebody else has 10 lakh rupees of capital, somebody else has 25 lakh rupees of capital. It doesn't matter how much capital who has. The trader will be only as good as his mentality here, okay, and his psychology there. And the ability to not bet everything in one trade, the ability to risk only 1% per trade, the ability to hold your horses even when you know that you see a breakout candle and you are really excited about going after that trade, and you really want to get in and you really think that okay, this trade is going to work my way, and here an important resistance is broken, here an important support is broken, so let me go long here or let me go short here, and I will make it till the end. I will make this a profitable trade. You cannot make a profitable trade. It is the market's job to go where it wants to go. It is your job to cut your losses quickly. And here these 4 points are going to help you. So this is it for this video. If you've liked it, Please let me know in the comments. It really encourages me to bring out newer and newer such topics for you. Also, hit the like button, subscribe and hit the bell icon so you're notified each time I post a new video. Thank you for watching and for your patience, guys. I'll catch you in the next one. Have a nice weekend. Bye bye.